which hours of the day are best for you. Recording started. Got a good question here from, who asked me that question? John. Have I seen a time when I could not get out of a major currency due to liquidity? I'll tell you a couple things. I do not trade during economic reports. I do not trade them at all. Okay? Meaning that if there's an 8:30 economic report, I am not looking to trade it. I'm usually going to get out about 60 to 90 seconds before the economic release, and I'm usually not going to re-enter from anywhere from 60 to 180 seconds after. So I give these economic reports wide berth because you know what? During economic releases, your orders are not necessarily going to work out the way you want them to. The volatility could absolutely affect them. Your broker will tell you this. Interbank will tell you this. During these crazy hours, these economic reports, because of the volatility, I mean, these are nutty hours. I don't want to trade during these hours because I really feel they do not reflect the true direction of the market. Okay? I don't believe that first response during the first 20 to 30 seconds of a report is necessarily the direction we're going to see 20 or 30 seconds later. You've all seen this, right? You've all seen this if you've watched an economic report. So I give those wide berth. So that's why liquidity is not usually an issue. Why else is liquidity not usually an issue for me? I focus on the good overlaps, the good market overlaps. Because of the kind of turnover or market participation we see out of Frankfurt, London, New York, I'm trading during the most liquid hours of the day. Nothing is more liquid in terms of market participation, the trading volume, than basically 7 or 8 to about noon. Most of your trading volume comes out of London. You know, not specifically London, but that region of the world. Okay, if you look at the BIS, and that's Bank of International Settlements, and I think it's BIS.org. In 2007, they had a report. We'll cover that later on this month. They break down which pairs, how much movement, which currencies, which countries. They break all that down, which regions of the world, what kind of participation we see. It's very cool information and very related to the kind of discussion we're having here today and throughout the month. Okay? And again, I'm on the East Coast, so everything I mention is in East Coast time. That's just the way I look at the world. All right? So if you're in another time, if you're in another part of the world, another time zone, I apologize, but I think in East Coast time. All right? So, John, as far as your question, you know, I avoid those hours based upon the hours that I trade and based upon the events that I avoid. That's just, you know, and again, for a lot of you that are telling me, you know, Raghee, I work, and I get it. I get it. You're going to have to basically look at, I don't know where everyone is in the world, if they're working 8 to 5 in California, if they're working 8 to 5 in New York. Okay? But you got to look at what trading hours you do have available to you. And by the way, if you come home and you've got, you know, the Asian session available to you, I'm not saying that you can't trade Asia. I think what most people forget is that there's different behavior patterns throughout the 24-hour day. There's different cycles. So if you do sit down to Asia, don't look at the volatility that happened during the early morning New York session. That's not going to be what you see for Asia. You can't gauge your expectations for pip movement based upon what you saw between 8 and 11 a.m. to happen again during 8 p.m. and 11 p.m. Make sense for that? Does that make sense? So if you are going to trade Asia, just make sure you've adjusted your expectations for your pip movement, your expectations for risk and reward. Okay, generally speaking, Asia is going to be less risky because of the muted pip movement. But remember, it's specific to the pair. Take a look at the euro-yen here. Let's take a look at the euro-yen now. The U.S. dollar is not part of this pair, right? So that U.S. overlap between Frankfurt, London, and New York, is it a factor? Is it a factor? Absolutely. Gosh, look at this. Similar rhythm, no? Not exactly, because the euro-yen gets active during that 2 a.m., 3 a.m. It's active, most volatile between 8, 9, 10, 11, and 12 before dropping off. But the pickup in activity based upon Asia, we see a much larger pickup here, don't we? That's compared to what we saw in the other dollar-correlated pairs, the pairs that traded against the U.S. dollar. We see a very big difference, don't we? It picks up a little bit more in Asia. Again, going back to who's concerned, who cares? Does Asia care about the euro-yen? Is the euro-yen, the relationship between the euro and the Japanese yen, is that an important relationship? You bet. So does Sydney, Tokyo, Hong Kong, and Singapore care about what's happening to this pair? The pickup in activity says they do. Okay? We've noticed that a lot of times the U.S. other pairs, the U.S. correlated pairs we saw, were pretty flat during these hours, weren't they? This one picks up pretty well. But look, 8, 9, 10, 11, 12 o'clock. It still spikes the same way, doesn't it, for the euro-yen? So, what are active hours for the euro-yen? Well, here's something to think about. If you're one of those people going, well, what the heck pair do I trade, and can I get some movement out of when I'm trading around my work schedule or my life? The euro-yen's not a bad option. In fact, the euro-yen's one of, if not the most popular pair in terms of daily turnover, again, based upon the Bank of International Settlements. This is the data that I read from their 2007 reports, one of the most popular cross rates. All right? And notice the rhythm. Could you look at this through the overlap of Asia, Europe, and the UK? A little bit of pop there, yes? Same drop-off, right, after Asia leaves? Same drop-off, that 4 a.m. drop-off when the Asian session winds down. Pick up during the U.S. session. One of the reasons for this is, by the way, just so you know, a lot of you might be asking, why the heck is there a pickup for the euro-yen when the U.S. gets started? You know, why doesn't it stay more stable with just Frankfurt and London? The reason is a lot of people look at the yen, the Japanese yen itself, and the pairs that trade against it, like your dollar yen and definitely your euro yen, to have a certain relationship back to the U.S. equities market, and that has a lot to do with risk aversion. Okay, and that's something we're not going to get into necessarily today, but understanding the correlations between certain non-forex markets and the way they affect the economy and the opinion of risk aversion and risk appetite throughout the world has a lot to do with why the euro yen and even the dollar yen have a certain correlation back to the U.S. equities market. It has to do with the low interest rate in Japan. It has to do with a certain amount of borrowing habits and whether or not we're borrowing this very inexpensive Japanese yen to throw into higher yielding assets. But I don't want to get too far into that. I don't want to lose anybody here. And I definitely want to stay on point. But that's one of the reasons you'll see the pickup here. Okay, so if you are looking for a pair that does have a few chunks of different hours through the day that it does pick up, the euro yen might be a good alternative. Okay? All right. So let's cover a few questions as we're winding down the last few minutes of our time here together. And hopefully, again, this is just the first discussion we're having throughout a month of risk management. I hope you understand that I'm not talking about formulas here. I don't think they're necessarily applicable to everybody in the same way. And even more so, I hope you understand this is the foundation of how we're going to look at risk. And we broke it down based upon pip movement and based upon time. The time you enter your trades is absolutely going to affect the kind of risk and reward that you're likely to see. And I hope I've shown that to you with the use of these graphs.